Good morning and welcome to today's live technical analysis. We're going to be starting off as usual with the euro against the US dollar. Now, before we continue, we should mention the financial releases that were released during yesterday's American session. In particular, we would like to note the S&P manufacturing PMI figure for May, in addition to the ISM manufacturing PMI figure for May as well, both stemming from the US. The S&P one showed and implied an expansion in manufacturing activity for the US, which in theory may have provided some support for the US dollar. But if you look at yesterday's trading session, the euro appreciated against the US dollar in addition to the other counterparts. For example, if you look at cable on the daily, yesterday the British pound was stronger. So overall, we saw weakening of the US dollar. We would attribute that weakening to the ISM manufacturing PMI figure, which came in lower than expected. Therefore, the mixed readings stemming from the US may have weighed on market optimism for a resilient US economy and thus may have weighed on the US dollar. Looking at the euro on the 4 hour time frame, which we will be dropping to now, you can see it's making a new higher high, made a new higher low. Overall, the RSI, despite being a 50, would imply a bullish market sentiment as we can draw an upwards moving trend line stemming from roughly the 28th of May. So upwards moving trend line, having broken above our resistance, turned to support, now turned back to resistance, uh, does still imply a bullish outlook for the particular pair. We are readjusting our resistance at R1. I would also bring up my S1. So readjusting our support and resistance levels. I would still be bullish for the euro. We do have the ECB's interest rate decision later on in the week. So on Thursday, around 95% euro OIS implies for a 25 basis point cut, which could weigh on the euro. But based on the preliminary HICP readings last week, I would not be surprised if the bank's accompanying statement is slightly hawkish, which in turn could provide some support for the euro. For today, we should be noting the Jones Job openings figure, which is expected to come in lower than the prior reading, which could weigh on the US dollar as it may imply a loosening labor market. RS1 taking at this higher low at 1.0840. Let's see if it's still valid. It is still valid, so this becomes S2. Have S1, S2 at 1.0790. It is still valid, has not been broken. Upwards moving trend line, R1 readjusted to a slightly higher level. This week, we should be noting as well the US employment data. So today you have job openings figures. Then tomorrow, you also have the ADP figure. Then on Friday, we have the US employment data, and in particular, the norm farm payrolls figure, all expected by economists to potentially weigh on the US dollar, as it may imply a loosening labor market. A slight deviation towards the upside could provide support for the USD. So, and now I have 1.0915. So you have your resistance and support levels would still be maintaining a bullish outlook as long as S1 is not broken. If S1 is broken, then we would switch for a bearish outlook down to S2. Next target for the bears could even be S3. USD JPY, having broken below our S1, we would now switch for a bearish outlook, as we've said. Around this area, we saw government intervention in support of the JPY, and we saw some hesitancy from the bulls. It now appears that the bears may be taking over, with the RSI below our chart having broken below the 50 figure, implying a switch from a bullish towards a bearish outlook. Our bearish outlook now appears to have been validated. S1 now becomes R1, R1 becomes R2, and so on. Next target for the bears could be at 153.56, which is our S1 level now. For our bearish outlook to continue, we would require a break below our S1 level. Next target at S2, 150.90. Lower than that, we have 148.20. So we're all bearish for the USD JPY, bullish for Euro USD. So R1, this becomes R2, and then 160.20 becomes R3. There we go. Moving on to cable, so the British pound against US dollar, slight credit a new higher high, might be bouncing to this level here. RSI is at 50, so it does imply neutral market sentiment, but it looks to be the same with the euro. The euro appears to be more bullish than the British pound, I'd say. We also note on a political level that the first debate between incumbent Prime Minister Rishi Sunak and Labour leader Keir Starmer is set to occur later on today. So potential of an increased volatility in the British pound. Let's see. My R1 would be dropped slightly lower to 1.2805. I'm keeping R2 and R3 the same, so 1.2890 for R2, R3 at 1.30, S1 remains the same at 1.2680, 1.256 for S2, and then 1.244 for S3. We're keeping our support levels the same, they're still valid. Now, if it does move down to S1, it could stay in a sideways bias. I wouldn't be that bullish for the British pound. We're noting the Bollinger Bands have narrowed, implying no market volatility. RSI is at 15, potential for a sideways bias. For the euro, it would have to break below our upwards moving trend line for us to switch for a sideways bias. The RSI at 50 is slightly concerning, but if you look at a higher high and then at a higher low, overall, we could still maintain our bullish outlook. USD CAD moving in a sideways fashion between 1.36 and 1.3727 S1 and R1, having broken above our downwards moving trend line, implies an interruption in the downwards momentum for the particular pair. RSI at 50 also further supports our sideways bias. And please keep note that this is the daily chart. 4 hour, much clearer picture, sideways bias between S1 and R1, validating our aforementioned hypothesis. For the Aussie, for tomorrow, we're noting Australia's GDP rate for Q1, expected to show that the Australian economy grew but at a slower rate than the prior quarter, which could weigh on the Aussie. We would maintain a sideways bias for the pair between 0.66 and 0.6710. If it breaks below S1, bearish outlook for the pair. Target for the bears could be 0.6515. On the flip side, breaking above R1 could be a bullish outlook, with the next target being 0.6780. So the Aussie could be determined by the release of the GDP rates in tomorrow's Asian session. For today, sideways bias between S1 and R1, smoothing of the Bollinger Bands, RSI, and moving averages, all point for a sideways bias, at least for today. Oil appears to be moving in a downwards fashion. Now, I would attribute this to the meeting of OPEC Plus on Sunday, probably as it was discussed yesterday. It appears that they are keeping their current voluntary oil production cuts, but will be phasing them out towards the end of 2025. Bearish for oil prices, good for consumers, lower oil prices, has broken below S1 and S2, taking aim for 71.50. Next target could be, if it breaks below 71.50, could be 67.90. In terms of support, we actually need to clear our chart just a little. And let's just place them again. We are on the daily time frame. Now, my S1 would be at the lower bound of the sideways moving channel that we had noted a few weeks ago. 76.65 would be a valid S1 level. Let's see if it stands up. So 76.65, that would be my R1. Then at the upper band of this sideways moving channel but it managed to break above. So around the 80.10 figure. So this would be my R2. Had a lot of buying and selling pressure between the new resistance levels and such. If it does break above R1, not be surprised for it to see resistance at 80.10. And then for R3, we could actually drop that lower to this old lower high at 83.60. So these are our resistance levels. Overall, we would maintain a bearish outlook. It has broken below S1 and S2. Thus, bearish outlook target is 7150. So that's S1, that's S2. We do need to find S3. We could take this wick here, 64.0, reach down, found support. Big figure as well, so key psychological figure. And let's just label our support levels. 67.90. If you're interested in the loonie, the BOC's interest rate decision is set to occur on Wednesday, so USD CAD might be interesting on Wednesday as well. The bank is expected to cut interest rates by 25 basis points. We will be looking at the loonie in tomorrow's analysis as well. Back to oil, 64 for S3. Overall, as you can see, we would be maintaining a bearish outlook for the commodities price. Appears to be aiming for support at 7150. RSI is at 28, so below 30 as well, playing a strong bearish market sentiment, further supporting our case. Onto gold, it appears to have moved in a relatively sideways bias. As you can see, we're keeping our support and resistance levels the same. Now it is fluctuating and remaining and staying near the R1 level of 2,360. Now, despite it remaining close to R1, I wouldn't be bullish. We would be we would maintain a sideways bias as long as it doesn't break below 2,275. But even then, if it does move towards this one and breaks below, I would maintain a bearish outlook. Now, the way I'm looking at the commodities price action is that it's respecting the mid range of the Bollinger Bands. So I would personally expect it to reach down to S1 and stay between S1 and R1. But if it is a significant move towards S1, for example, a bearish candle such as this one here, then I would actually switch for a bearish outlook as the RSI could also drop below 50. And then taking in potentially for 2,200 at S2. For now, we would maintain a sideways bias given the RSI and a narrowing of the Bollinger Bands, also moving a relatively sideways motion. But I wouldn't be bullish. I'd either be maintain a sideways bias or a bearish outlook, one or the other. But for now, sideways between S1 and R1, despite it being close to R1. The divergence we noted last week, you can see the Dow Jones 30 turned lower before the S&P and Nasdaq 100, bouncing off S1 at 38K, still maintaining a bearish outlook for the Dow Jones 30, forming a new lower high and lower lows. RSI bouncing off 50, staying towards 40 implies there is still a bearish sentiment within the index. S&P 500 declining towards 50. Need to readjust my S1 level at 5,235. Still bearish. Dow Jones 30 is moving in downward fashion. I would expect the S&P 500 to do that as well. It's still validating the upward moving trend line. But overall, if you look at the price action on the Dow Jones and should the S&P follow it, we could maintain a bearish outlook as long as it breaks a clear break below S1, so closes and opens below S1. Target then would be potentially 5,116. Lower than that, we have 4,950. R1 remains the same with R2. As a matter of fact, we could actually drop down R1 to 5,325. And then R2, 5,425. but then I would keep R3 at 5,500. Psychological figure. It's a big figure as well. Could meet some heavy resistance, but if we're keeping it $100 apart, it would be more prudent to keep it at 5,525. So that's R1, R2, R3. Same with the support levels. I'd be bearish for the S&P 500 as well. Nasdaq resting on R1 on S1, excuse me, 18.5k. Bearish for me. It appears to be ready to break below S1. If it does, make a clear break below S1. Target then for my S2 would be 17.8k. Rather than that, we have 16.9k roughly. So bearish on the Nasdaq, S&P, and Dow Jones 30. Boeing recovering nicely, breaking above 50. Still wouldn't call it to be bullish. Sideways between S1 and R1. If it does break above R1, then I would be bullish. Airbus has announced a new order of about 100 wide-body aircraft to a company in China. Could provide support for the company's stock price. From a technical point of view, it is moving in a downwards fashion. The RSI is still close to 30. It's broken below S1, so support and to resistance. But still, I wouldn't be bearish. From a technical, yes. From a fundamental point of view, if you have a new order for 100 wide-body aircraft, then it could provide support for the company's stock price. From a technical point of view, it looks to be, though, for a bearish outlook, but we will maintain a bullish outlook on Airbus from a fundamental point of view. So flipping R1, readjusting R2 and R3. That's S1, 147.65 becomes S2, and then I am looking at this old low for my S3 support figure. There we go. 143.80 for S3. It's a bit too close to S2, but still nonetheless valid, as you can see. Wicked up and then bounced off, implying that there is a potential for heavy support to be at this level. That's S1, S2, S3. NVIDIA nicely touching on R1 at 1,158. There is a stock split set for NVIDIA, which would show, if I'm not mistaken, it's a 10-for-1, which would bring readjust the price down to roughly $100 per share. So we are expecting a stock split for NVIDIA. Apple appears to be moving in an upwards fashion. RSI is at 70. Upwards moving trend line is still validated, as you can see from here. Bollinger Band tilted towards the upside. Testing resistance currently at 195.30. RSI 70 as well. Bullish outlook for Apple stock price. Tesla still in a relatively sideways bias between 168.77 and 196.0. RSI fluctuating around 50 does also imply a neutral market sentiment in addition to the narrowing of the Bollinger Bands. So sideways bias for Tesla. Looking at IBM, does appear to be moving in a downwards fashion. And the crossing of the 100 moving average below the 200 moving average could be also a signal for bearish outlook, having broken S1, S2, and S3 since the last time we've seen it. And look at S3, it is a valid resistance level, bounced off, bearish for IBM. So essentially, we have our support levels now turned to resistance. This was S1, S2, S3. No tide was validated on each occasion. Broke below, continued, broke below S2, bounced off S3, did break below, readjusted, but then managed to break below and has acted as a resistance level. Bearish outlook for IBM. For S1, I would take at 158.56. That would be my S1. Looking at the price action here. For S2, I'm looking for an old peak. That wick there, coinciding with the price action here. But it's a bit too close to S1. And since we're using this from a more macro perspective, taking this old higher low. And then being forced to take this old low before it gapped up. So this becomes S1. 146.20 becomes S2. 136.40 becomes my new S3. Then 166.70 becomes my R1. $179.60 becomes my R2. And then 191.60 becomes my R3. So we have our support and resistance levels, would still be maintaining a bearish outlook for the reasons I mentioned before. So Mobile bouncing off R1. It's nice, could be support. US dollar index, Norwegian krona, Facebook finding resistance at 490.98. UBS. Oh, bearish outlook, clearly. RSI is at 24. Strong bearish market sentiment, aiming for 452.60 perhaps. Bearish outlook for BP. Let's clear our charts. And let's place our support and resistance levels again. Let's clear this. We are on the 4-hour time frame. Now, the first level of resistance I would look at is around this wick here, 458.70. So this would be my S1. Then lower than that, taking this old low. Looking at the price action, I do prefer sometimes taking the bodies of the candles as more significant. Dipped into the liquidity, but moved higher. Support potentially at around 443.20. And then this old low, you can see 420.23. Resistance upon where it gapped down. So 479.25. Taking this old high for resistance at R2, and then this old higher high for R3. I'm just placing my support and resistance levels. I would still be bearish, clearly, as we said before. Appears to be a strong bearish market sentiment emerging for the company stock price. Target for the bears for me would be 458.70. Lower than that is 443.20. Would require a clear break below S1 for our bearish outlook to continue. Moving on, let's see. Perhaps we could drop down to a 15-minute time frame for gold. And let's see how that is reacting. Now, as a temporary support level, resistance level, this was it. So as you can see, the market structure formed new higher highs, higher lows, and around this point here, and let's just note that with the shape. At this point here, it failed. It did not actually fail. It did form a higher high. I would ignore this wick, but it still was moving in an upwards fashion. If we look at the hello, it was moving at the RSI, was close to 70, then rapidly moved and broke below the reading of 50. Note that when it created a higher low, it didn't break below 50, but at this point it did. Retraced, failed to break above 50, but then failed to form a new higher high in comparison to this high. Thus, it could appear that the bullish momentum may have been fading away at this point, and the validation for me would have been once it had broken below, sold low, and is now finding support. It is oversold, so it might be due a market correction, potentially around this level here, but our resistance levels are 2,344. But nonetheless, it appears to be a bearish outlook for, well, sideways at least for today, for the precious metal. And with that, I think that does it for today. Thank you very much for watching, and I will see you all tomorrow.
Hi everyone, welcome to today's session. So for today's session, we're talking about building your trading strategy. And for today's first part of the series, we are talking about scalping. So we'll give about 2 more minutes to let more people join the session before we get started. In the meantime, let me know if you guys can see my slides and see me as well and hear me. And yep, I'll see you guys. Feel free to grab yourselves a drink, make yourselves comfortable, and we'll begin in 2 more minutes. Thanks, everyone. Okay, let's go ahead and get started. So before we get started, as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We're gonna firstly start off by doing a quick intro to scalping. Then we'll look at which timeframes we should use, followed by looking at how you can use news events to your advantage, especially when scalping. And then we'll look at Fibonacci confluence, where you should place your stop loss and take profit. And lastly, the three powerful scalping strategies. Okay, let's go ahead and get started. So if you have any questions throughout the webinar, feel free to pop them into the chat, and I'll be happy to answer those as we move along. So firstly, what is scalping? It's a fast-paced, exciting, and mind-battling trading strategy. It's basically the short time periods between the opening and the closing of a trade. It allows you to grab very small amounts of pips without risking a lot of pips, and it allows you to take advantage of market volatility. And you'll see in a little bit how this market volatility can work in your favor, especially when it comes to trading the news events. So why scalp? Firstly, you're able to avoid known unknowns. Secondly, because of the locus of control in terms of the 20 pips versus trading your 200 pips. And lastly, there are new opportunities every time you open the chart. So which time frame should you use to scalp? So there's one very basic um, strategy, which is to look out for a clear market structure. So this applies for every kind of trading strategy, not just scalping. Firstly, you see here, this is an example of a clear market structure. You can see we've drawn out the shape of the chart. And this is a very obvious example of an unclear market structure. So there are no clear swing highs or lows, no clear move up or down. So in this example, this is our US Singapore dollar on an M15 view, and it's pretty unclear as you can see here. But once we change the view to an H1 view, it becomes a lot clearer and a lot easier to analyze on. So the very basic understanding is that the clearer the swing low, the clearer the swing high, and the clearer the trend between these 2 points, the more accurate your analysis will be. Just give me a Okay, so how much time do you need to scalp? The holding time ranges from a few seconds to a few hours. So something that we recommend is to perhaps space it out. So firstly, you can spend 1 hour in the morning, 1 hour in the afternoon, and an hour in the evening. So it's important to have proper risk management so that you don't need to monitor the trades the entire way. And we'll show you some risk management strategies as well, for you to use when you are scalping. How much leverage do you need to scalp? This is pretty high leverage, perhaps from 1 to 100 onwards. And we are using pretty low spread pairs as well. How much capital do you need? A good amount to start with is 250. So a decent leverage of at least 1 to 100 is preferred, but not necessary. So if you can do it with 250, then you can do it with 2,500 and 25,000. But we typically recommend to not rush into scaling up. Okay. Okay, now let's get into the news component of this. Um, okay. So one way to keep an eye on the economic events happening around the world is by using an economic calendar. So the one that we typically like to use is forexfactory.com. So you can see here, this is what the interface looks like. It gives you the currencies that are impacted by the economic event. And then on the left, so the first column is the actual data. The second column is the forecasted data, and then the last column is our previous data. So our tip is to filter out the orange and red folder news. So this is the medium to high impact events over here. And then we'll compare the actual and forecasted data to determine the outlook of the news release. So let me just pull out my Forex Factory. Okay, so you guys can see my screen. Let me just check. Okay, so this is what our Forex Factory looks like, the interface. So we typically will look at the entire week by settings, but you can look at the entire month as well if that's what you prefer. So you can see here, I have it filtered to focus only on the medium to high impact events, like we mentioned earlier. That's the orange and red icons. So how you filter it is by clicking on this green arrow or filter. You can click on the yellow and the gray icons as well. That basically gives you all of the events for that week. Yellow is low impact and gray is non-economic events. So that includes like bank holidays, public holidays, things like that. You can also filter out any of the event types that you are focusing on, as well as any currencies that you are trading. Okay, but you can see when you apply the filter to look at all of the events for the week, it gets a little bit much to go through. And that's the reason why we just mainly focus on the medium to high impact events, since they have a greater impact on our charts as well, or more visible impact. Okay, let's get back to my slides. So if we look at the economic events for this week so far, on Monday we had US and China events. China's prime rates remained as forecasted and as the previous data. On Tuesday, yesterday, we saw Australia's monetary policy meeting minutes. We also had Canadian CPI data and US FOMC member Waller speaks. On Wednesday, we have UK's Bank of England, Gov Bailey, and Kiwi's RBNZ monetary policy statements and rate statements. You can see that the Cash rate remained at 5.5% as forecasted and as previous. UK CPI was higher than forecasted, so we can take a look at how that impacted the charts in a little bit. Yeah, so for the rest of the week, tomorrow we have FOMC meeting minutes, retail sales for Kiwi, French, German, and UK manufacturing PMI, and Euro flash manufacturing PMI as well. US unemployment claims and flash manufacturing and services PMI. And on Friday, we have UK retail sales, Swiss National Bank, Chairman Jordan, Canadian retail sales, US durable goods orders, and FOMC member wallet as well as US consumer sentiment. Okay, so that's for this week's. There are a lot of economic calendars out there for you to use. You can see in this example here, on the right, we have what we just saw, forexfactory.com. And on the left, we have investing.com, which is another website that you could use as well. So we saw earlier what exactly the FX News Calendar is it allows traders to see at one glance all important economic data releases, shows you key events such as GDP, CPI, NFP, crude oil inventories, and even central banks' monetary policy meetings. Okay, so a couple of high impact events that are important for us to understand would be our FOMC meetings. So FOMC stands for the Federal Open Market Committee, and it's the US Fed's way of communicating their view on monetary policies. So the Fed interest rate decision only comes together with these meetings, and if the Fed is dovish, the USD is bearish. If the Fed is hawkish, USD is bullish. If interest rate goes up, USD is bullish. And if interest rate goes down, the USD is bearish. Okay. Now we have employment data. So we firstly have the NFP, and the NFP is basically the non-farm payroll. So it's basically measures the change in citizens that are employed from the previous months, excluding the farming industry. Unemployment rate measures the total unemployment of workforce that is seeking active employment from the previous month. Okay, and next we have crude oil inventories. So these measure the weekly change in the amount of crude held by US farms. And if crude inventories increase, then we can expect oil prices to drop. EIA, Energy Information Admin, is a short-term outlook on the monthly forecast, the demand and prices across major fuel types. So a couple of benefits of using an FX calendar includes helping you to plan your trades and allocations for the day or the week or the month ahead, since it allows us to look at the all of the economic events for the upcoming week or month, as we saw earlier. It also helps to alert the individual to upcoming important news that might happen and may also affect volatility. Okay, so let's look at how exactly we can use these news events. So the two events that we're going to look at are the US unemployment claims that happen at 12:30 p.m. GMT every Thursday, and then we'll look at the central bank interest rate decisions. So in these examples, okay, apologies for the font is kind of covering the top, but on 15th of June last year, the unemployment claims for the US were released. And if you look at our chart, this is the DXY, so it's the US index. And you can see that at 12 o'clock, this is on the H1 timing. At 12 o'clock, the price of DXY dropped significantly. And you can see that momentum is dropping as well for our MACD. Now, if we look at the same chart, or rather the same event, but on the gold chart, we actually see the opposite effect happening. So for gold, similarly on the H1 at 12 o'clock on the 15th of June, we actually saw prices rise significantly. So the DXY and gold typically have a negative correlation. So whenever the DXY drops, we can expect gold to increase and vice versa. Okay, now let's look at FOMC meetings. So this impact is on the DXY. So at 6 o'clock on Wednesday, 14th of June, we saw prices rise significantly, even above this resistance level. Okay, but on our gold, we see the opposite effect happening. We see it drop significantly. Okay, so if we look at unemployment claims again, this is on our US dollar index, and with prices increasing at once prices were released at 12:30 p.m. GMT, the actual data was lower than the forecasted 211K, and the actual data was 209K. So this is a positive sign for US economy since our number of unemployment claims dropped. Hence, we saw the DXY rise significantly when the data was released. So of course, we can expect the opposite effect for gold. But if we look at our Euro USD, we actually see that same effect happening, where price is dropping significantly. So that's how you can use the news events to scout. So the previous slides that we saw were all on the H1 time frame, and these are both on the 30-minute time frame. So we typically would recommend nothing below 15 minutes. I think 15 minutes would be the lowest time frame that we would go, since the 1 minute and 5 minute are pretty it can get quite messy and quite difficult to analyze on those time frames. Okay, now let's dive into the three powerful scalping strategies. Firstly, we're going to start off with our horizontal pullback strategy. So in this example, you can see prices, we have three swing highs that are reversing off of that same level. Once price breaks out of that level, it now becomes a support level. And then we call it a pullback because we're expecting prices to retrace or pull back to that same level, like you see in the arrows. Okay, now this is the same pullback strategy, just opposite. So over here we have three swing lows that line up in the same area. With prices breaking out of that support, it now becomes a resistance, and we're expecting prices to retrace or pull back to that same level. So we can use this method with a combination of different indicators. The first example we have here is horizontal pullback with our Ichimoku. So if you're unfamiliar with Ichimoku, if the price is moving below the cloud, it is a bearish signal, like we see here. If prices are bouncing off of the cloud, you can see it like what is happening here. It's also bouncing off this horizontal pullback level. Okay. So that's how we use pullback with Ichimoku. We see the swing low, prices break below the swing low, thus becoming a pullback resistance. and then once it reaches this this pullback level, it then becomes a resistance level. Okay, and it's also bouncing off of the Ichimoku cloud as well. Okay, next we're gonna look at the Fibonacci retracement strategy. So some things to take note of for Fibonacci retracement. Firstly, you want to make sure that you are using a really clear chart, like those that we saw earlier. For the clear market structure, unclear market structure. You can see in this GIF that it's pretty unclear since the swing highs and lows are quite insignificant and they're best to use for Fibonacci points. So the swing highs and lows that you should look out for should be clear, like the ones that we have here. Okay, basically you're looking out for a clear market structure. Another thing that you should look out for is to make sure that the Fibonacci trend line doesn't cut through the price structure. So you want to make sure that it follows the market structure as closely as possible. So here you see we've drawn out the shape of the market structure, but we're cutting through price structure instead of following our market structure here. So here's a correct example. When you are going in for a top-to-down approach, we would start from point 1 and then end with point 2. If you're going from a bottom to up, it's the same thing. Start with point 1, end with point 2. Okay, so if we combine our Fibonacci retracement with our first strategy, which is the pullback, here we're going to do that in this example. So here we have our pullback. We have two swing lows that line up. Price has broken below that level, and so we are calling it a horizontal pullback resistance since we're expecting price to retrace back to that level. So we're taking a Fibonacci retracement from the swing high to the swing low, and we're using our 61.8 retracement because it lines up with that level. So I forgot to mention as well, but for Fibonacci retracements, we use the mid-range Fibonacci levels. So 23.6, you can see here, 23, 50, 50, 61.8, and 78.6. Okay, so yep, going back to this example, we have another retracement from this swing high to this bottom. And instead, we have a 50% Fibonacci retracement that lines up with that same area. Okay. Yeah, so since prices, so you see, since we have this Fibonacci area here, we have two Fibonacci levels that line up. We actually call it a Fibonacci confluence area, which basically implies that we're expecting prices to reverse off of those areas instead of breaking through it. So here you can see prices have reached that confluence area along with our pullback, and we're expecting it to reverse off of it, which is exactly what happened here. Okay, we'll get into confluence in a little bit more detail, I think in my subsequent slides. But if you are unfamiliar with Fibonacci, I'll just really quickly show you this website that you can use. Okay. Okay. So this is just the forexarmy.com and it's a completely free to use website. So you can look at how to draw Fibonacci retracement correctly, but we are also going through some Fibonacci extensions, some Fibonacci confluence, which is really important. Yeah, so if you're oh, there should be a video here. There should be a link to a video on YouTube. Yeah, so you can check that out after this webinar if you're still unfamiliar. But yeah, so these are the levels that you want to use for your Fibonacci retracements between the 0 to 100. Some steps on how to draw a proper Fibonacci retracement. we get all we get a lot more in depth in Fibonacci retracements during our Fibonacci webinar series. So stay tuned for those. But I won't get too in depth in it now. So feel free to check out this website after this webinar if you want a more in-depth guide on how to draw a retracement. So what I really wanted to mention are these um, Fibonacci confluence areas. So a confluence area is basically when there are two or more Fibonacci levels that line up in an area, and you can see that prices typically will be attracted to these areas, but might not be able to break out of them. So we can typically always expect it to bounce off of them. So that's what we see here, and that's what we saw in our slides as well. And over here in this example as well. And there are a lot of examples for you to take a look at. Okay, now getting back to my slides. Here we are using a Fibonacci retracement with a pullback and Ichimoku. So we have prices moving in a descending trend line. So this isn't really a trend line, it's more of a resistance area. Since a valid trend line requires 3 or more touches on the trend line, but we can see prices moving in a downtrend, and prices are also moving, or they were moving within below the Ichimoku cloud. So it was also giving us a bearish signal. Now we have prices moving within the cloud, which suggests a change in trend. Okay, and now we see prices where we expect price to reverse off of the descending trend line. It's also in line with a 38.2% Fibonacci retracement. And we're using it in combination with stochastic as well. This method that we're using is called a hidden resistance. Basically occurs when on our stochastic, it shows us a resistance level. But at those points that we've highlighted, you can see price is actually making a lower low. So with all of these in combination, it tells us that price might continue to reverse off this descending trend line and continue in a downtrend. Okay, so next, let's look at our next example. So our last scalping strategy is the Nike tick strategy. And the Nike tick strategy uses the levels that are greater than 100%. Okay, let me see, we have a question. Okay, what are the parameters for stochastic? I can show you in a little bit on our trading view. Uh, okay, let me just finish my slides first and then I'll get back to that. Okay, but typically, I think most people would recommend the 1433, which is a range-bound momentum oscillator. So it kind of shows you the location of the close compared to the high or low range over a number of periods. So it really depends on you, but I think most people would use somewhere between 1433. But I'll show you what we use after our slides on our trading view. Okay, so the Nike tick strategy, we use levels that are greater than 100%. And yeah, so we call it the Nike tick strategy or our Fibonacci extension strategy because it uses this Nike tick shape, or just a simple tick kind of shape. So our starting point is from this point, point 1, and ending point, point 2. Our projected our projected values are the 127 as well as the 161.8. But in this example, you can see price already broke out of the 127. That's why we are going off of the 161.8. So what happens, how we use it is we're basically expecting a reversal off of either one of these levels, the 127 or the 161.8. So let's look at an actual example in the charts with we have this swing high resistance. So we have one swing high here and second swing high here. We also have a Fibonacci extension. You can see the really small Nike tick shape here. And you can see price is currently testing the 127.2. Okay, it's currently testing this level, so we're expecting price to reverse off of it, which is exactly what happened here. Now, this example uses an inverted Nike tick. So the Nike tick hit is over here, smaller than the tail. And since price already broke out of the 127.2, we expect price to reverse off the 161.8, especially since it's in line with this swing low support level. Okay, so this is what you should look out for in this GIF. Okay, so we watch for the reactions of the 127.2 and 161, and we see prices react of the 161.8. Okay, so you can take a screenshot of this slide if you wish, but this is just a kind of guideline to how you can use the Nike tick strategy using for scalping purposes. So the timeframes we're using would be the M30, H1, and H4. Entry criteria is if price breaks out of the 127.2. Stop loss will place at the 145. Idea and validation 138. Break even will be 11% of the recent move. 50% take profit or partial take profit will be 11%. Full TP or full take profit is 22%. And your bonus would be to support these levels with your Fibonacci retracement, expansions, projections. If you're unfamiliar with those, you can check out the website I showed earlier, or stay tuned for our Fibonacci webinar series. And of course, to line it up with your support and resistance. So it can be the levels that we went through earlier, the horizontal pullback, as well as any overlap levels. Okay. Now for a long example, here we have, okay, it's a bit messy here, but let me try and break it down for you. The first point is that we have a projection. So for projection, we are looking for this kind of a flash or lightning bolt shape, and it uses 3 points. So the first point is here, second point is the swing low, and third point is the swing high here. For projections, we use 61.8, 78.6, and 100%. And you can see here that our 61.8 lines up with this swing low. Okay. Another point is that we have this inverted Nike tick. Point 1 here, point 2 here. Okay, so the ending point, we're expecting it to reverse off the 127.2, which is exactly what happened here. Okay. So some trade management techniques with confluence, Fibonacci confluence, but this can include any resistance or support levels as well. So firstly is to place your stop loss beyond any key resistance areas or confluence areas. So the reason is because price is attracted to such strong areas of Fibonacci confluence. So if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. Take profit should be placed before, because your take profit target, typically if you place it um if you place it beyond it, there's a chance that it won't be able to reach your profit target, since when price reaches your Fibonacci confluence area or any resistance area, there's a high chance it won't be able um to break out of it, which means that we're expecting it to reverse back to our entry instead, or even worse, your stop loss. So that's also one of the reasons why people complain that the market is being manipulated, because they miss the take profit by 1 pip. Okay, so in this example here, the image that I have below, this is for a buy entry. So you can see that our take profit is below, take profit and stop loss are both below your Fibonacci confluence areas. Whereas if we're going in for a sell entry, like in this example, we would place our stop loss and take profit levels above any confluence levels or resistance areas. Okay, so yeah, we already went through this. So you can see, just take a look at the image here. This is an example of a Fibonacci confluence where prices are basically heading towards this area, this confluence area, and we're expecting prices to bounce off since we have three Fibonacci levels lining up. Okay. Yeah, here's again another example. We have the 127.2 Fibonacci extension. So Fibonacci extension is the Nike tick strategy. So you can see it's upside down, inverted tick, and we have the 61.8% Fibonacci projection. In this example, it also uses the Nike tick. So you can see starting point here, ending point here, and the shape is, if you follow my mouse, the shape is just like this. Yeah. And we are also using a Fibonacci projection with a starting point here, middle point here, and ending point here. Okay, and another example, just to make sure you guys get it. We have the 161.8 Fibonacci extension. You can see the Nike tick shape pretty clearly here. Fibonacci expansions, I didn't really mention this, but Fibonacci expansions use the negative values. So minus 61.8 and minus 27.7, I think, 27.2. Yeah, but basically the negative values. And it also uses the lightning bolt shape. So more often than not, these Fibonacci expansions can be used together with your Fibonacci projection levels as well. Like you see here, we have the lightning bolt shape here. Fibonacci expansion uses the negatives, which is the blue level. Fibonacci projection, you can follow the orange arrows, and our Fibonacci extension is our inverted Nike tick, which gives us this really strong confluence area, and we see price bounce off this level. Okay, dynamic take profit placement. These are more for where to place your take profit levels instead of finding confluence levels. So for this technique, it's basically about being able to make sure that you don't use a fixed take profit or stop loss level, which means that you won't always perhaps place your take profit 100 pips above your entry, just because a forum tells you to use a fixed take profit placement. So instead, you should always just follow whatever charts you use, since every chart is different, and we're following the swing high and swing low resistances. supporting our entries and any horizontal levels with our Fibonacci retracements, projections, so on and so forth. Okay, it's reversed off nicely. Oh, heading for our take profit. And price reached our take profit before reversing off of it. Okay, and luckily we placed our take profit above this level, since if we place it any lower, we would have price would have missed the reversal and would have hit it straight to our stop loss. Here's another example using a descending trend line that price has recently broken out of. So it's a bullish signal. And price is heading towards our take profit over here. That's a Fibonacci confluence area as well. Okay, so that's why it's important to place your take profit lower or below any confluence areas so that we make sure we catch that reversal. Okay, that's it for my slides. Let me just pull out my trading view and show you our, just to answer that question we had on the parameters for stochastic. Oh, so we would typically use a, okay, it really depends on the time frame that you are using. We normally will use either 2133, 1433, or 1453. Okay, but again, the time frame really depends on your own trading strategy. Since I'm using 4 hours, that's why I'm using 2133. Or the calculation, if you're using TradingView or MT4, it should be calculated for you. Yeah, if it should be automatic. Otherwise, 2133 or 1433. Okay, any other questions? If there are no other questions, that's it for my webinar today. Thank you guys so much for joining me. I hope you guys found this session helpful. And yeah, I'll see you guys again next week. Bye, everyone. Thank you. Oh, Bollinger Band. Um, yep, it's this. Oh, my LinkedIn is just my name. So that's just Melanie Chong, Chong. And yeah, feel free to connect with me on LinkedIn as well if you liked this webinar. If not, I'll see you guys again next week. Yeah. Thanks everyone. Bye.